Andres Shepherd with Cantor Fitzgerald.
Hey, good morning, guys. Congrats on the quarter.
Good morning, Andreas.
A couple quick questions for me. So, regarding the order for the 100 units, which are backed by deposits, does that mean that these are final? And separately, when can you give us a sense of when roughly you expect to recognize revenue for these? I mean, my guess is that they're going to be ramping up. It's not going to be 100 in say 1 quarter. So, any color you can provide there?
Yeah, absolutely. So these orders that we announced are really to secure production slots. So we've been working with the fleet on getting their commitment to adopt these vehicles, so then we can have the confidence to go ahead and procure all the parts needed in order to assemble these vehicles. So you are correct, though. In terms of how these will actually roll out, as we announced on the call, we plan on starting production in the latter part of 23. And we've made commitments with these fleets that we would have all of the units delivered back to them by the first quarter, by the end of the first quarter in 24.
Okay, got it. That's very helpful. Thank you. And maybe one follow-up on the guidance you provided of $2 to $3 million for 2022. Are you able to give us any sense of what that translates roughly in terms of units, of hybrid units?
Yes, thank you for that question. So we expect that we'll be shipping over 100 units. And the reason why we're focusing more on revenue as opposed to units is because we really have, 2 different use cases. One, the pricing depends on whether or not it's a new install or a retrofit, and it's also based off of the type of truck. So we are confident based off of the inbound interest that we have currently that we're going to be able to achieve that $2 to $3 million, but it's more about that blended average, which currently is a little bit heavier on the retrofit side versus the new installs.
Got it. That's very helpful. Thanks. Congrats again.
Thank you.
Our next question is from Steven Fisher with UBS.
Great, thanks. Good morning. Just to follow up on the timing of the Hypertruck deliveries, I presume late 23 means Q4. Just wondering if you're thinking sort of late in the quarter. And then I guess are those 100 units that you plan for those Q4 and Q1 of the subsequent year, is that kind of all you are thinking about for those 2 quarters, or could some of those other 325 reservations still make it into that time period for sometime in 23 and early part of 24?
Yeah, so as we said, late 23, I would say Q4 is correct, but I wouldn't say that that implies at the end of Q4 of 23. Our goal is in Q4 we will actually start ramping up, start deliveries. As mentioned, the commitment to the fleets is that all of those vehicles would be delivered back to them by the first quarter of 24, but we're not saying that would be all the units we'd be able to do during that time. We're really viewing this as the initial ramp up, and one of our goals as we go through these ride and drive events that we've been mentioning is not only to secure these orders, but also to build a backlog and reservations. And then as that backlog of reservations is building, then we'll start converting those into orders with confirmed production slots, which you saw with these 100 trucks. So we plan to continue to do that over the months and quarters ahead, and then start delivering those in Q4 of 23.
Okay, great. And then given your comments about the competitive landscape on the hybrids, I'm just wondering how we should be modeling that as we think over the next few years. Would you think maybe a ramp up in 23 and maybe again in 24 before coming down in 25 as some of those alternative, the electric only trucks really start to make their way into the market? And if so, if that's sort of a ramp down, do you think some of the new products and services that Sherry Lance is going to be kind of bringing on, what's the timing of the ramp up of some of those to maybe mitigate potential downturn in the hybrids?
Sure. So on the last earnings call, we had mentioned with the hybrid product, we were going to be kind of analyzing what we saw the addressable market being. We did that over this past quarter. On the last earnings call, we had noted the announcement of the 15-liter natural gas engine, and we had forecast that we did see that impacting market demand, as well as the discussions with these ride and drives. It was great to hear from fleets and really get their feedback. But what we heard was fleets want full electric vehicles. Now, whether that be BEV plug-in, local delivery type vehicles, or electric range extender vehicles like the Hypertruck ERX or a hydrogen fuel cell vehicle. So we do expect that the market is going to shift more towards full electric vehicles like those solutions, like the Hypertruck ERX. And the hybrid is going to be more of a start into electrification, but it's not the end-all be-all like these full electric vehicles will be. And then in terms of Sherry Lance, we're super thrilled to have her joining the team. As we mentioned, she's going to be really driving the business efforts on the fuel agnostic and fuel cell solutions. And we want to make sure that people understand that we view those as a very critical part of our story. While we're starting with the Hypertruck ERX and natural gas solution today, we want to make sure we are future-proofed into hydrogen. And when hydrogen becomes available, that our powertrain is a logical solution to use, because we'll already have millions and millions of miles deployed on natural gas to then be able to use in hydrogen. And we see hydrogen starting with kind of local delivery type applications versus we see the Hypertruck ERX starting with more long haul applications, up to 1,000 miles in between refuels. And I think no one can really tell when hydrogen is going to happen. There's a lot of development going towards it, but it is a technology that a lot of infrastructure still needs to be built out in order to get there to make it a true long-haul solution. So Sherry will be driving those. We have already kicked off developments on both of those ends, on the fuel agnostic and fuel cell side, which we plan to share more on as we go through this year.
Great. And then lastly, wondering what you think about the impact of the Cummins acquisition of Meritor and what that could mean for Hyliion, I guess both from a competitive perspective, but also on the flip side, perhaps there's some opportunity that you could work more collaboratively with Cummins, given they're increasingly becoming an important part of your supply chain.
Sure. So we're all obviously excited for Meritor to see the acquisition come through with Cummins. Subsequent to that, we did have discussions with Cummins about, is this going to have any impact of the supply chain for Hyliion, and we were assured that it would not, and we would have continuity of supply on those axles and continue on the relationship as we had established. So we don't see any threat to the business plan, at this stage from a supply chain standpoint. And then, with Cummins, we've got a strong collaborative working relationship with them, and we continue to plan to carry that forward. And it's exciting to see that now, we'll be sourcing axles from them as well.
Terrific. Best of luck. Thanks.
Thank you.
Our next question is from Jason Stuhldreher with Barclays.
Oh, hi. It's Brian Johnson on with Jason. In terms of obviously with SPACs, we're very focused on cash in the bank versus spend rate. So you talked about $145 million of OpEx this year. When does CapEx need to ramp up? And then how tightly will that CapEx be tied to firm orders as opposed to, build it and they will come kind of capacity?
Yeah, so great question. And first, I'd like to just remind everyone that we really have an asset-light approach. So CapEx spend for us is a very minor spend. And this year we expect really to be in the range of, call it $10 to $20 million. And that's really more focused on the facility expansion and the building out of our test lab, which should be more one-time in nature and specific to 2022. So going forward, you shouldn't see a significant amount of investment on the CapEx side. We will be doing low volume installations here at Austin as we're ramping up the ERX, but then we still have the ability to do installations both growing at mod centers, and then production, with the ultimate goal that we will be on the OEM line. So low volume on the CapEx side, but also as you're thinking about us from a liquidity perspective, very important that it's not just looked at from a cash and cash equivalents perspective, but you also have to include the short-term and long-term investments, which, as we said, ended the year really close to $560 million. So we feel that we're very well positioned to get through all of the commercial milestones that we talked about today.
Okay, and so this is why I look at that means cash could easily last well through 23 when you're hitting these milestones.
Exactly.
Okay, and then would you need to raise more cash towards the tail end of that with the milestones under your belt, or is that point? I guess it gets to my second question. How are you thinking about cash flow break even for the business?
So we currently do not anticipate that we are going to have to raise any additional funds. Right now, it will also be dependent on what the ramp up of the Hypertruck is, although we're incredibly encouraged by the recent order announcement and the feedback that we've been receiving from other fleets so far. So looking forward to hopefully announcing more orders in the near future. But we do not expect to have to raise any additional capital at this time. For the foreseeable future. Yep.
Our next question is from Mark Delaney with Goldman Sachs.
Yes, thank you very much for taking my questions. First, on the orders versus the reservation and some of the differences there, thank you for all the color you provided on that topic already. I had a little bit more something to learn on that front. So, for an order, you mentioned deposits are required. Maybe you could just discuss how large a deposit is needed in order to put an order down, and also are those binding, or is that one of the differences versus a reservation, or can orders still be canceled?
Yeah, great question. So the deposits are in the thousands of dollars per unit that are being ordered. And so we see this as a pretty substantive amount that fleets are putting down to commit to these production slots. And, I think that's the big difference is with the orders, the fleets are confirming, their actual build slots. Very conventional in the industry. When a fleet goes to buy a new truck, they confirm a build slot. That is what we are doing as well. We're adopting that same process. Reservations are more fleet's indication and commitment to this is how many they see they could adopt in the years ahead, but we're not actually identifying build slots for them with a reservation. So that's really the differentiator with the orders. And as mentioned in one of the previous calls, going forward, we plan to both expand the number of orders we have to confirm those production slots so that as we go into production, we're really building to a backlog of build slots. And then the reservations we plan to grow to continue to show the level of interest that we're receiving from fleets in the Hypertruck.
Got it. That's helpful. Thank you. My second question was on the OpEx, and it came in under guidance, and I was hoping for some more color. Was that all timing related, and these expenses will show up in 22 as part of the 22 outlook, or was there some efficiencies that the company has found on the spending?
It was exactly what you said. It was more timing than anything else, really related to just the number of installs that we completed in Q4 versus Q1, as well as just the timing of some of the truck purchases that we are procuring to complete the next phase of our development on the Hypertruck. So those expenses are already embedded in the guidance that we provided today.
Okay. That's all. Just lastly for me, just on the hybrid program, the company's focus is on other products, right? And you made clear you're expecting more growth and things like the ERX rather than the hybrid. With the outlook for 2 to 3 million of sales in the hybrid this year, maybe talk about the ROI to support that program. I imagine it's pretty limited profitability, if any, on 2 to 3 million of sales. So just trying to think through how you guys are thinking about the investment to still support the hybrid program, and is it worthwhile relative to the longer term outlook that you're thinking for that product line? Thank you.
Sure. So, I think the view that we've had on it is the learnings from deploying these solutions out there, getting them in fleet's hands, actually recognizing revenue on them are huge milestones for the company and learnings that are going to carry over to when we launch the Hypertruck ERX as well. And so, with the deployment of these, we have the customer interest there to go ahead and deploy the 2 to 3 million this year. We have a high confidence level on that end. And, we want to take that as an opportunity to also really run through, the learnings of kind of growing and scaling the company, having the things like actually recognizing revenue, service capabilities in place, interacting with the customers, and also one of the big things is having units deployed out in the field, traveling millions of miles. There's learnings that come from that and reliability. So, for instance, I'll give you one example to it. With our hybrid product, we created wiring specifications. I know this sounds like a minor detail, but wiring specifications of how the product needs to be built in order to be robust enough to last in the Class 8 commercial vehicle space. We're now able to carry those exact specifications over and deploy that with the Hypertruck product so that when we go ahead and launch the Hypertruck, we have a high confidence in the reliability of that system.
Understood. Thank you.
Again, if you have a question at this time, please press the star, then the number 1 key on your touch-tone telephone. Our next question is from Noel Parks with Tuohy Brothers.
Hi, good morning.
Morning, Noel.
Just a couple things. You mentioned the controlled fleet trials that you're going to have underway. And I was wondering, could you maybe break out some of the steps and milestones just of your sort of customer evaluation process? I think it can get a little bit confusing because there are customers that are sort of involved at the pre-commitment point, piloting or testing out the vehicles. And then there are the ones that, once they're signed customers, they're involved in piloting. So if you could maybe just sort of drill down a bit with that would be helpful.
Sure. So let me start with the progression from where we are now to the start of production on the customer base, and then we can talk about fleet's level of commitments that they're making. So the first is, where we're at today is we're doing the ride and drive events that we had mentioned. So this is really the fleet's first opportunity to get in the vehicle, experience it themselves. Some of the fleets, actually a lot of the fleets that have come in and experienced it are also bringing drivers from their operations along with them so that they can give their true and honest feedback. And it's been a very, very successful, couple of months in interacting with fleets on that end. And that's thus where you're seeing fleets starting to make those commitments. As we mentioned on the last earnings call and followed up on this one, we are on track to do controlled fleet deployments of the Hypertruck in fleet operations later in 2022. So that'll actually be moving, goods and trailers of our customers, of these fleets we're mentioning, to let them actually run the trucks in their operations. We will then continue those trials into 2023, and then we'll finalize our certifications with CARB, EPA, and NHTSA, and then that will put us on track to be able to start production of the Hypertruck in late 23. So in terms of the fleet's level of comfort with actually going ahead and placing orders, it varies based on what a fleet's normal adoption cycle is for new technologies. Some fleets are going to start with 1 or 2 units just to really be able to run it in their operations, analyze how it performs, and then grow from there. Others are willing to make larger commitments right from the start, which we're seeing with the 100 units that were ordered across the fleets that we mentioned today. So it is expected that we're going to see varying levels of orders from fleets, and I don't think that shouldn't be read into a level of fleets' interest in the technology. It's more just what's their adoption cycle of how they bring new technology into their operations. And ultimately, our goal is to be their powertrain of choice in the years ahead as they continue to buy more and more trucks.
Okay, great, thanks. And just sort of a housekeeping question, and I apologize if you touched on this already, but for the fourth quarter and as a result for the year, operating expense came in pretty decently below the pace I expected from sort of the last revision to that, to your expectations for that number. So you could just sort of talk a little bit about what the gap was. I'm not complaining, mind you. It's never bad really to see costs be lower than expected, but just wanted some insight on that.
Sure. It was really just strictly a timing issue, really related to the number of installations that we did in Q4 versus our initial expectations, but we expect to complete all of those by Q1. So those are all embedded in the guidance, as well as just some timing of truck purchases that we need and what we're anticipating for the next phase of the build out of our samples. So more timing than anything else, but already embedded into the guidance that we gave you today.
Great. And then just one more on timing. You discussed in the release and mentioned today that you've added these 4 trucking industry veterans to your sales force. And I'm just curious about the timing of their coming on. Was any of the expense for them embedded in the fourth quarter expense numbers, or are they going to hit entirely in 2022?
There was a very small amount that was embedded in Q4. It's primarily in Q1.
Okay. Okay, great. Thanks a lot.
You bet. Thank you.
Our next question is from Bill Peterson with J.P. Morgan.
Hi, good morning, and thanks for taking the questions. I was hoping to go into a little bit more detail on I guess, the recent roadshow feedback. You discussed it a little bit, but I guess, can you provide some specific examples on some of the feedback that you've received that you're applying here to the work here in 2022? Any, I don't know, issues that were uncovered and, that are leading to some additional things that you're going to work through this year?
Sure. So one that we saw as a huge positive was, one of the goals with the Hypertruck Innovation Council members and other fleets are bringing in is we expect that these fleets are operating other alternative fuel vehicles as well. And so one of the really interesting pieces of feedback was that a couple of the fleets actually operate BEV early deployment vehicles in their operations, and they were commenting to us about just how well the integration was done in our truck and how smooth that our truck was compared to some of the other electric vehicles that they are trying out. So that was obviously a big positive. Something like, just to give you a very nitpicky one, we had a fleet a gentleman was wearing bifocals, and where we mounted our screen in the truck, messed with his bifocals. So it's like that level of feedback that now we're taking that and we're adjusting where we actually mount the screen inside the vehicle. So it's a wide range of feedback that we're getting, but it's so much better to know that now as opposed to when we actually are in the starting of production phase in 23. So, great feedback thus far from fleets.
Yeah, I guess maybe it's a good segue. So the Innovation Council, you have a number of members in that, Wegmans and Werner, and Wegmans, I think, was company you talked about here last year. But I guess the initial order book doesn't seem to have anyone from that. Maybe that's more on the come. I'm curious on the status of some of the pilots with the Innovation Councils and why they're not showing kind of up in the reservation or order book.
Yeah, great question, and timing is impeccable. Just yesterday, actually, yesterday afternoon, we received an order from one of our Innovation Council members for the Hypertruck, and so we plan on showcasing that in the days ahead and sharing a little bit more details. But the level of engagement from the Innovation Council has been very strong, but we don't see this as a technology that's just going to be for those fleets. We see it as a great solution for other fleets as well. So stay tuned for that update on some follow-on orders, as well as level of interest growing from fleets outside the Innovation Council as well.
Okay, great. The last question for me is, obviously supply constraints are pretty prevalent still. It seems like you're kind of reiterating a lot of your timing and not delaying it. But I guess I'm just curious on you mentioned before, like trucks are, I think, more than 12-month lead time. Want to see if that's still the case, any improvement there, or if it's even gotten worse. And then other areas like semiconductors, batteries, just confirming you have everything you need to meet your 2022 milestones. But more importantly, what are you keeping your eye out or really trying to ensure you have in place such that you can begin your ramp in 2023, the latter half of 2023?
Sure. So we definitely still see that there are supply chain hurdles out there across the industry, not unique to Hyliion. But as we had leaned in a little on the last call, and just to reconfirm it on this call, that we have confirmed production delivery slots from our suppliers that meet the timelines that we've laid out on the last call and on this call. So we are confident in those. I think one of the big things we highlighted was just the backlog of trucks, as you were mentioning. This has a carry-on effect to both the hybrid and the ERX. The ERX, we need these trucks for development purposes. For the hybrid, that's one of the reasons that you saw some of our deliveries of hybrid shift from Q4 into Q1 of this year was just because fleets were awaiting receiving the trucks from the OEMs. But once again, to reiterate it, we have strong confidence that we've got the supplies we need for 2022, parts and trucks, all the above, to be able to go ahead and hit these milestones.
Okay, thanks, and good luck on the execution here.
Thank you.
I am showing no further questions at this time. I'll now turn the call over to Thomas Healy, founder and CEO of Hyliion, for closing remarks. Please go ahead, sir.
Well, thank you everyone for joining the call today. It was a very exciting quarter for us. Great to see the level of interest from fleets in the Hypertruck product starting to be confirmed with orders and additional reservations, as well as the growth of both our board and our team here at Hyliion. And we look forward to a very exciting 2022 and connecting again on the next earnings call. Thank you.
Ladies and gentlemen, this concludes today's conference call. Thank you again for your participation and have a wonderful day. You may now disconnect.